But at the break, we were talking, we're all about the timing of all of this and how fast this could be happening. So can you go into what you're seeing coming down the road?
I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. Oh. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money. The credit markets are already starting to dry up. That's usually an indicator. The housing market's rolling over. That's a bad indicator.
Printing money is this stuff here. You have silver coin, you have a copper coin made silver, right?
That's right.
Basically, and it's called debasing the currency, which the Romans and Chinese already did.
Yeah, because don't forget, the debasement of currency works in a simple way. If you're really thirsty and I have a bottle of water, you'll pay anything for it. If you're really thirsty and I've got 5 bottles of water, you're kind of thinking, yeah, I probably need some of that water. I'll buy them all, but at a lower price. If I say, here's 1 million bottles of water, you don't want any of it because there's too much water now. It has no scarcity. So if you make too much of something, it becomes less valuable. So if Da Vinci had created 50 million pieces of art, guess what? They're worthless. And so it's that concept. And what it does is if something gets devalued versus something else, so we're not making more shares in the S&P. Actually, what we're doing is buying them back, making less of them. Therefore, the S&P goes up. Real estate. Yes, there's periods where we try and create new real estate, but generally real estate prices go up versus the Fed balance sheet because it's a relatively scarce asset. Same with gold, same with crypto.